I call the member for Kooyong.
Thank you, Madam Deputy Speaker. I rise to follow my colleague and friend, the member for Curtin, and also to support this Banking Amendment Covered Bonds Bill 2011 to enable authorised deposit institutions, including banks, credit unions and building societies, to issue covered bonds. In doing so, Madam Deputy Speaker, I am very pleased that the government is following the lead of the coalition with introducing the issuance of covered bonds, one of our key points in our 9-point banking plan. So what is a covered bond? And I look to a very good speech by John Lonsdale of the Treasury, the Markets Group in Treasury, in a speech that he made in August of this year. And he said that the characteristics of covered bonds seem straightforward and widely accepted. But in fact, in particular countries they can be different. But they're defined by the European Covered Bond Council with 4 essential characteristics. First, the bond is issued by and the bondholders have full recourse to a regulated credit institution. Second, bondholders have a claim against a cover pool of assets in priority to all other unsecured creditors. Third, the credit institution has an ongoing obligation to maintain enough assets in the cover pool to satisfy the claims of covered bondholders. And finally, the obligations of the credit institution are supervised by an independent regulatory body. Madam Deputy Speaker, covered bonds allow banks to diversify away from unsecured debt sources. Covered bonds will be secured by a pool of assets. The value of assets in a covered bond pool must be at least 103% of the covered bonds on issue. In doing so, they will increase the financing options for domestic authorised deposit institutions. This is extremely important at a time of global financial uncertainty, particularly as we see the problems play out in Europe and also in the United States. They will reduce ADI's reliance on offshore markets for funding, and they could also increase competition in the mortgage market by decreasing borrowing costs. Importantly, these reforms have the support of the Big Four Australian banks. These Big Four Australian banks make up 4 of the 9 in the world that have a credit rating of AA or higher. I note that Ralph Norris, when he was still the CEO at the Commonwealth Bank of Australia, said that 60% of its mortgage book, and it's the biggest mortgage book in Australia, was funded by retail deposits. This will expand the sources of funds for the Commonwealth Bank. So too Gail Kelly at Westpac has been extremely supportive. And other banks like Macquarie Bank or Suncorp could issue AA-rated covered bonds by virtue of their underlying credit rating. Importantly, in a situation of insolvency, holders of covered bonds can have recourse to the pool of assets ahead of other debt holders and shareholders. There are safeguards for other debt holders, namely the proportion of assets that can be committed to the covered bond pool is 8% of the value of the local assets. This is a figure that is actually a bit lower than what we've seen in Europe. But there's also a financial claims scheme which provides a guarantee for small investors, and APRA, Australian Prudential Regulation Authority, will have the powers to regulate the use of these covered bonds. Interestingly, Standard & Poor's, a well-known rating agency, when it looked at the initial draft legislation, raised some concerns around the asset-liability mismatch of the risk of issuing covered bonds. And they put out a research paper, and I quote, and this was covered in an Australian Financial Review article back in April. They're concerned these include considering the legal framework supporting the timely and full payment of covered bond obligations, availability of any payment moratorium or restructuring, cover pool servicing and the use of over-collateralisation if an issuer fails. These were some of the concerns that they raised. But I'm pleased to say in this final draft of legislation now before the House, many of these issues have been addressed. Madam Deputy Speaker, I know that once we implement this change in the Australian financial markets, the covered bond market will grow gradually, and many expect it to be including up to a quarter of wholesale issuance over time. And the Treasurer has said that Australian banks could issue up to $130 billion of covered bonds over the next few years. Importantly, this will enable Australian banks to be on equal terms with some of its international counterparts. We've seen banks from Canada and Norway come to Australia with the issuance of covered bonds, where Australian banks have had their hands tied. Interestingly, this reform has also been put in place, had already been put in place in New Zealand. And so this will be an important reform for the Australian industry, and it has the support of the Australian Bankers Association, including also, as I mentioned, a number of the major banks in Australia. As I said at the beginning, Madam Deputy Speaker, the Coalition has taken the initiative on finance and banking reform with our 9-point plan, which was announced on the 25th of October 2010. And I just want to mention these 9 points because, unfortunately, the Treasurer, and I see here the Assistant Treasurer, haven't taken heed of these 9 points and introduced them. And hopefully, with the adoption of the covered bonds point, they will also adopt our other suggestions. Number 1 was giving the ACCC power to investigate collusive price signalling. Second, to encourage APRA to investigate whether the major banks are taking on unnecessary risks in the name of trying to maximise short-term returns that conflict with the preferences of those that backstop the system, namely taxpayers. 3, formally mandating the RBA to publish regular rather than irregular reporting on bank net interest margins, returns on equity and profitability, so that it can be determined whether the major banks are extracting monopolistic profits, that is, whether taxpayers are effectively subsidising supernormal returns. 4, investigating David Murray's proposal for Australia Post to make its 3,800 branches available as distribution channels for smaller lenders. To be clear, the Coalition does not endorse Australia Post assuming balance sheet risk and getting into the banking business itself. 5, instructing Treasury and the RBA to investigate ways to further improve the liquidity of the residential and commercial mortgage-backed securities market, which are an alternative source of funding for smaller lenders, including consideration of the Coalition proposal to extend the government's credit rating to AAA-rated commercial paper in those markets to improve liquidity. 6, exploring further simplification of the beloved Financial Services Reform Act to make the business of actually getting out and doing business easier and simpler. 7, directing APRA to explore whether the risk weightings on business loans secured by residential properties are punitive. Number 8, and this is what we're discussing today, commissioning a resolution to the debate about whether the bank should be able to issue covered bonds in the same way other jurisdictions allow their banks to, which provides a more affordable line of credit, and thank goodness the government is following the Coalition's lead. And finally, commissioning a full review into the Australian financial system, something that should be done immediately. So, Madam Deputy Speaker, I commend the leadership that the Shadow Treasurer, the Minister and the Shadow Minister for Finance have actually, and our leader, have taken on this issue. It's being the covered bonds, issue of covered bonds will assist, Madam Deputy Speaker, the issuance of covered bonds will assist the financial services industry here, will assist consumers. We are following the developments in other markets, including New Zealand, where this has already been in operation. It has the support of the Big Four and other lenders. It has the support of the Australian Bankers Association, and importantly, it was an initiative of the Coalition, so I commend the bill to the House.